In today's video, we're going to discuss how to offset dividend cuts from Yieldmax, Roundhill, and Defiance funds. These funds help us earn over $500,000 per year in dividends, as you can see below, and they help us live the FIRE lifestyle, which means financially independent, retire early. If you need help doing the same, email me for my e-guides at akintod48@gmail.com. We use margin here at this channel to get ahead, and we obviously buy these funds, Roundhill, Yieldmax, Defiance, and Cornerstone funds. They give us these exorbitant dividends, but we also use margin to get even more income out of those funds. So we have about $400,000 in margin debt, as you can see there, but our dividends of over $500,000 per year will pay that back in less than 1 year. And yes, you can see my dividends grew to over $500,000 now due to this recent development, and I'll share with you that development. But also we've had a dividend cut with Roundhill. So how do we increase our dividends that much even with a Roundhill dividend cut? As you can see, we're still up 26% for the year, beating all of the indexes. The S&P is up 18% and the Nasdaq's up 18%. So they're both almost in line with each other. And the Dow's up 10 and the Russell's up 10. So we're beating all the indexes on a year-to-date basis, which I have to say in every video. And on a daily basis, we're up 10,000 on Friday, or 0.81%, which, as you can see above, was in line with the indexes. If you go to my complete view, you'll see that we're up 1.23, which beat the Nasdaq above, which was up 1.13. So when you factor in margin, we beat all the indexes once again on a daily basis. And this is because we use a unique combination of funds, Roundhill, Defiance, Yieldmax, and Cornerstone. And yes, we're in this margin debt of over $400,000, but this doesn't show up on a credit check to banks. And this is low interest debt. I've negotiated my rates down twice. Many of my clients who bought my e-guides did the same thing, because when you buy my e-guides, you get my phone number for life, where I send you the script to negotiate your margin rates down with. So this is how the system works at my channel. Okay, our dividends pay back our margin debt in less than 1 year. We're not worried about the leverage because that goes away each month, and then our account grows by the equivalent amount. So after we receive about $500,000 worth of dividends in the next year, we'll be up $500,000 in our account. We'll be at 1.3 million, all things considered, if we're in a flat market, and our debt will be at zero roughly, okay, including life expenses, which I have. And I also have an E-Trade card where I swipe out of my checking account, my E-Trade checking account, and I can go wherever I want in this world and buy whatever I want. Even with this margin debt being so high, I just withdraw out of my available withdrawal, which is right here, this $236,000 number. Now, my debt did rise from 400 to 430 in the last week, but that's not why our income rose so much. Okay, I'll get into that in 1 second. And so again, when you're using this margin, you want to have high available withdrawal, and that's how you withstand margin calls. We can withstand over 20% corrections in the market and avoid a margin call in the process while still paying our bills and living free from a 9 to 5. Once again, I live out of this equity, which adds to my debt, but then my dividends pay that back each month. We make about 40 to 50,000 now in dividends each month. So that just pays back all of my expenses. My monthly expenses are about 5,000 to 6,000 per month. So this is how we're paying down our margin and still paying our bills at the same time and growing our account at the same time. And this is the greatest information that I know of that exists on YouTube. I don't think I get enough love for my strategies. Okay, my subscribers are only at about 13,000, whereas if you look at other big YouTube channels, they have many more subscribers, and I don't think they're giving half the content that I'm giving. Okay, the recent content I've been giving on options, on how to protect your account with options, I've been getting so many questions about options and how I can turn $100 into 1 million. And actually the math is there and the system is there, and you saw in the recent crash that we made over 1,000% in our options. We're up closer to 2,000% in our options, which I think is just a great thing. I mean, what better way to make money than use dividends with margin, and then the dividends pay back the margin, and then you protect it with options. But the key is buying the right options, and I teach you how to set those strikes and those expiration dates. So what better system would you want, with dividends and with protecting your dividends with options? And I direct people to my e-guides for all of my information because I get so many questions. So I don't think I'm getting enough love here at this channel. Once again, the options that I sell, this is a whole nother thing that I do to lower my margin, lower my risk, and increase my income with at the same time. Because if I get assigned in these options, we get assigned at these greater yields, which then increase my income even further. If we don't get assigned, then we just collect these premiums of about 50,000, which lowered my margin by about 50,000. And again, it lowers our risk because we have a lower cost basis. Yes, you see losses in this column here, But actually, if you take the strike price minus the premiums, you have a true cost basis. And now many members on Discord are starting to figure this out. So I sell options to go long on the market. And if we get a sign, we just make even more money and more income in the process. That's one way that I offset dividend cuts from Yieldmax, Roundhill, and Defiance. But also it lowers our risk and it lowers our margin debt, which lowers our interest. So I think the way that I use options is the best on YouTube, and I'm not getting enough love for it, but that's okay. If you need help selling options like I do, that's in my Volume 6 e-guide. And if you need help buying options to insure your portfolio against a market crash, that's in my Volume 5 e-guide. So, okay, that's one way that I increase my income when we have our dividend cuts. Again, I just sell options, which then give me more premiums, and I take those proceeds and I buy other dividend paying funds with them. Or we get assigned in our options and we get more yield through our assignment. We get assigned at the lows. That's what you want when you sell options. And then we go long at those lows and we make more money, not only with dividends, but with capital gains as well. Okay, the next way you can increase your income is by obviously just buying more funds on margin. Okay, for every $1 you put in your account, you get $4 of purchasing power. I'm just using a small amount, as I always say, of that over 1 million in purchasing power that everyone's granted to them in their brokerage account to get ahead. Okay, but the key is buying low maintenance funds. Roundhill is high maintenance at E-Trade. It's 50% maintenance. Whereas if you go to another broker, you can get lower maintenance for Roundhill. But for me at E-Trade, Roundhill is higher maintenance. And I like it like that because if it's lower maintenance, yes, you can go to other brokers and buy more of it, but you don't want to just buy more of something on margin just because it has lower maintenance. You're going to have too much leverage. So I kind of like the 50% maintenance at E-Trade because it actually tells me how to keep my risk in check. So QDTE and XDTE are 50% maintenance. And if you're going to buy more dividend funds on margin, you have to be careful with Roundhill funds at E-Trade because they're going to suck up half your equity. When I sell options, as you can see here, let's say if you go to a TECL, when I sell options, the naked options are 60% maintenance and the longs are 75% maintenance. So maintenance is the key to everything. It's the key to living free from 9 to 5 using margin. Even if you're not using margin, you want to have low maintenance so that you can withdraw out of your brokerage account, okay, and live free from a 9 to 5. And if you sell options, the maintenance is even lower. So this is how I do everything. If you need help understanding maintenance, that's in my Volume 3 e-guide. So yes, you can buy more dividend funds on margin to increase your income, but be aware of the maintenance. If you have too high of maintenance, then you're going to suck up too much of your available withdrawal. If we do get a correction over 30%, which is where I'd be closer to a margin call, then my put options that I buy would absolutely clean up in the event of a downturn. We would make more money in that event than we would lose if we just let our options compound and go up over 1,000%. The options that I choose can go from $100 to $3 million in one crash, but I like to say over $1 million just to be safe. And again, if you need help buying options like I do, that's in my Volume 5 e-guide. I remember during the recent crash on Monday, all of my members were watching the live stream that I did. We saw my options were up 800% in one day, let alone the 10% that we were down in the market before that. How much our options were up. We're up over 1,000% before that. Options aren't even my forte. I just learned how to use options because I have so much margin on that I had to protect my portfolio at all costs. I used to buy every option strike price to study how these options work. I figured out the ones that work best during a crash. Okay, the third way to increase income in a down market is to buy Defiance funds. Okay, that's how we increased our income to be up over $500,000 per year. Now in dividends, Defiance is one of our largest holdings, and so we have now increased income from the dip because they sell puts, and when the market falls, you like to sell puts because you get higher premiums as the market falls. You want to own Yieldmax in up markets because they sell calls, and when the market rises, they're going to get higher premiums, so they'll sell calls and they'll get higher premiums. You'll get a dividend increase that way. And then Cornerstone, okay, you just hold Cornerstone because Cornerstone is a 5-star fund and it has a 21% dividend that it sets every year at its NAV, and it moves upper left to right on its chart. So you get an average of 20% premiums with Cornerstone, and you get the 20% dividend in Cornerstone that's set for the year. It doesn't change throughout the year. So even if we get dividend cuts in Yieldmax and Defiance, we still keep our same income with Cornerstone, okay? So Cornerstone, I have $400,000 in Cornerstone, by the way, because it's 30% maintenance, and Defiance is also 30% maintenance. So Cornerstone and Defiance, that's why I park so much of my money in those two funds, because Cornerstone's a 5-star rated fund and Defiance has been doing very well on Morningstar as well. But here you can see Defiance is 30% maintenance. So Cornerstone and Defiance, again, are 30% maintenance. Roundhill is 50% maintenance. You can go to other brokers for lower maintenance, but you don't want to just add more leverage. And you also lose the special drip for Cornerstone. We'll get into that later, but Cornerstone drips is 21% dividend down at the NAV. With QQY, I also like how the options here are 20%, okay? The naked options, 20%. So that's another way to increase your income in a downturn is you sell options like I already mentioned, but you sell options on Defiance, which have low maintenance, 20% maintenance. And then when you get assigned in Defiance, you get more income in the process because you're getting assigned at the lows with those exorbitant yields, which will then rise when you're assigned in them because when the market falls, you get higher premiums when you sell puts. So you should get assigned and theoretically get an income boost if you sell these puts in Defiance and again, get assigned at the lows. All right, another way to increase your income in a down market is to buy other funds that are down that are necessary, like Clip. I've been buying Clip on the recent dip, for example, because K-Web has been down and Clip gives us valuable international exposure to China. I like to have brick exposure, Brazil, Russia, India, China, but India and Russia aren't really investable. So I buy funds like Clip that have been down because K-Web was down and that gives us a 50% dividend and diversification from our American funds. Okay, another thing you can do is buy more staple stocks on the dip. Okay, I've been buying tons of staple stocks that have been doing very well during the recent crash. Okay, you know, Procter and Gamble, Johnson and Johnson. These stocks tend to raise their dividends every year and shield your account from unwanted volatility with Yieldmax, Roundhill, and Defiance funds because many of those funds are tech related. So I use staples to offset the volatility in my account and grow our dividends some in the process. I have about $100,000 worth of staple stocks. Okay, and then lastly, you take your rights offering for Cornerstone to increase your income, okay? Cornerstone, yes, it goes upward, left, or right on its chart here, but it moves sideways to down on its E-Trade chart. So why is it down on this 10-year chart? I get this question all the time, and dividends, drips, and rights offerings are the key with Cornerstone, and when you play this fund properly between the rights offerings, you get to take the 20% premiums and the 20% dividends and the drip dividends, where if you own it up here at the highs, it's dripping the 21% dividend down at the lows for free money every month. So you get these benefits with Cornerstone, which add up to about 50% gains in a given year if you take the 20% premiums plus the 20% dividends and the drips. And so they can kind of perform in line with XDTE, but then you get the rights offering, which makes you level up even faster because you sell out during the rights offering and reload back at the lows, okay? And they tell you when to buy and sell when you own Cornerstone. Everyone's so scared of the rights offering, but with the S&P, you have to time that yourself, and that's very difficult. But with Cornerstone, again, they give you the rights offering announcement, and that's when you participate in the rights offering to really level up your account. Okay, if you need help playing Cornerstone, that's in my Volume 4 e-guide. When you buy my e-guide, you get free access to Discord for life, where we alert you of the Cornerstone rights offering announcement. We have an RSS feed hooked up here that tells us when the rights offering announcement is going to occur, and that's thanks to my admin. I really appreciate my admin and all of my members at Discord, the over 1,000 members we have here at Discord. I really appreciate each and every one of you. I love you all so much. So I hope everyone's enjoying these ideas today on how to offset potential dividend cuts from Yieldmax, Roundhill, and Defiance funds. I've given you 8 to 10 really good reasons, I think. And if you have any questions about what I'm doing, email me for my e-guides at akintod48@gmail.com. Please like this video so that it gets spread to more people. More people could benefit from this information on not only how to live off dividends and margin to be free from 9 to 5, but how to protect your account as well from a potential market crash and how to protect your account from a potential dividend cut. So I think all this information needs to be heard. Most of the conversations we have now are on Discord and they don't really come in the YouTube chats. I get that, but please don't forget to comment there because that also pushes the video out to more people, okay? I really appreciate y'all watching. Talk to you soon. Bye-bye.